Hello, this is Joe Pryor, and this is Tuesday. I normally do this video on Monday, but yesterday was a crazy day. The first thing I want to share with you about market conditions right now is that we have had an improvement in the last week on interest rates. So for investors, with an interest rate buy down, Friday, rates went down to 5.99% on a 25% down investor loan and 5.875% on a 30% investor loan. Now today, it went down another eighth of a point. So we're now down to 5.875% on 25% down and 5.75% on 30% down. So the question is, why? A lot of this has to do with what the market thinks about the economy, and the 10-year Treasury is your best indicator of what, basically the financial markets are thinking. And that has improved. And so improvements in that means that rates are lower. Now, some of this is tied to policy. Obviously, the tariffs that just were put on today for Mexico and China and Canada, three of our biggest, if not our biggest trading partners, has something to do with the fact that there's a loss of confidence. Now, what that basically means is that it's a great time for investors to buy. Or if you're an owner-occupant, I'd be looking at houses right now. That's an important thing. So, cash flow, which has been difficult to find in the United States and a lot easier to find in Oklahoma City and Tulsa because of our affordability, are even better because that's a quarter point swing, and that can make $30, $40 a month on a basic property in terms of increased cash flow. And so when I do a return on investment analysis, it makes a huge difference. So for instance, even with the rates at an eighth of a point higher, on a webinar that I did Saturday for investors, and I probably have done 100 to 200 webinars and seminars to investors, and I've use this all the time. I'm always astounded at the annualized return. A lot of realtors who say, yeah, I'll work with investors, wouldn't know what a return on investment is. But I can tell you that basically we're getting annualized over a 7-year period of time, 13% after tax, 19% before tax every year on your money with investment real estate. So that's in the Oklahoma City and Tulsa markets. And now with an eighth of a point swing, it gets even a little bit better. It's not going to be huge, but about, instead of 19, it'll be 19.5% return on investment. So a perfect time for you to be buying real estate, especially now that we're in the rental season. In other words, we're in March. You're going to be closing in April. This is April through July, the hottest time of the year. That's number one. Number two, something I said Saturday was density has happened finally in Oklahoma City and Tulsa markets and happening to other secondary markets. And so finding single-family homes is more difficult. We still have urban and suburban core single families being built that are available to you, but also duplexes. And this is going to be the future. And I've got another video coming for you just on duplexes. For the next 5 years, we are going to be selling a lot of duplexes. We have that kind of a land position. And if you take the median price of a home in the United States at $428,000, a duplex at $410,000 with deluxe features, please listen to that video so I can describe to you what you're getting. But rates are down. We have a ton of inventory right now in duplexes and single family. Perfect time to buy, peak season. Let us know if you're interested. We'll be happy to connect with you with a Zoom meeting. And my remote's not working, so give us a call.